For today, though, we are going to turn now to Rightmove, the property portal. Most people will be familiar with it. The whole reason behind its success is it's pretty much where one goes to look at properties, certainly if you want to buy a new property. However, it has to move with the times, and even though it has a more or less, well, I don't want to say monopoly, but certainly a dominant market position, Hugh, the other week, it outlined some plans for growth, as it would probably term them, which were very much viewed dimly by shareholders, partly because the near-term costs were seen as quite significant. Can we talk a bit about what they said and what the implications are for margins and profitability and what have you, and go from there?
Yeah, absolutely. So on the 7th of November, at its investment day, Rightmove revealed to the market that it would be investing an incremental £60 million in tech over the 2026 to 2028 period. This came as something that's a surprise to the market, and shares reacted pretty dramatically in response. I think they were down 25% at one point in early trading, but they did recover and closed about 12% down. What this basically means is that Rightmove is taking a short-term hit to its profitability. And that's why investors reacted poorly. It argues that this will allow it to grow EPS at an even greater rate than it had originally been sort of signaling from about 2030 onwards, so quite far into the future, when it hopes to grow EPS at over 15% a year. In the meantime, it's guided for its operating margin, which sits at about 70%, to fall down as low as 67% next year, which will be the kind of trough operating margin, if you like. And that will mean that we see EPS falling by sort of high single, low double digits, depending on which analyst you believe. In terms of where is this money going, it's going on improving your experience as a user of the app or website. It's going on improving the digital infrastructure that underpins the portal, in particular, kind of refreshing it so that it will allow Rightmove to layer on various forms of agentic AI a bit more easily than it can do at the moment on its legacy systems. And then finally, they have a bucket for R&D for growth areas, which is a bit more opaque, but essentially means, I think, that they'll be, if they see a growth area that they like the look of, they will have this stock of investment spend that they can immediately channel in pursuit of it.
Indeed. The reason so many people like Rightmove as an investor is very much those margins to begin with, aren't they? I mean, it's a low-cost portal in terms of its own costs, and therefore its profitability is incredibly high, and it has network effects, as we've seen, as I struggled to almost describe it as a monopoly. Of course, there are likes of Zoopla out there, but realistically, I think most people use Rightmove for these things. So it's been able to grow users rapidly over the years. It's faced a number of competitive threats that haven't really come to anything, which we might get onto. However, this year there has been a bit of a shadow over companies like Rightmove in terms of the market getting a bit worried about what AI would do to these companies, whether it would disrupt their business model. So I think it's partly with that in mind that they were outlining all these investments they'll be making and saying this is an opportunity, not a threat, as everyone likes to say. Clearly, that didn't really go down very well. And some people have suggested it may partly be almost removed from the whole AI discussion, but partly be a reflection of the fact that they think that Rightmove has underinvested in the past. So some of this is actually catch-up as well, which is a bit of the issue, because we haven't really, as you pointed out, Hugh, the other day, we haven't really seen too many other companies talking about this level of AI investment, proportionally speaking.
Yeah, exactly. So it's quite rare for a company to so publicly take 2 steps back to take 3 steps forward, as it were. What I think the general consensus among analysts is that Rightmove has underinvested in its tech over recent years. Essentially, its product has been good enough to maintain its market dominance and maintain those very strong operating margins, which I think it's the highest in the FTSE 100. So it's pretty impressive. Unsurprisingly, the company disagrees. The CFO, Rory Hook, was talking to us the other day about how he viewed it as accelerating future investment rather than making up for past deficiencies. But of course, Rightmove's leadership would say that. So I guess the question is now, that we wait and see where the proof of this investment bearing fruit will be.
Yeah. Can we say a bit about what some of the examples of what it's planning to do, or what AI capabilities, quote unquote, it's planning to add. We mentioned some of these in the article.
Absolutely. So more chatbots. Good news.
Of course.
So, for example, if instead of putting in some quite rigid criteria, you can now say, I want to buy a 2-bed flat in Bognor Regis with some outdoor space for my pet alpaca, and an AI will conjure up some prospects for you. Another thing that generative AI will allow you to do is to model features on prospective purchases. So, for example, I can model what a shed in my yard for my alpaca would look like, model it in a range of paint colors, and then also have Rightmove help me calculate what the cost of the shed would be, and perhaps what incremental value it would bring to the property.
I never knew Rightmove was so big on alpacas, but there we are. Can we talk about the potential threat, another potential threat from AI, or some people have thought the likes of ChatGPT could be a disintermediation device, as it may well prove with Google, for example, people using ChatGPT instead of Google. Some people suggested they might use it instead of Rightmove, which does seem a bit far-fetched to me, but certainly there's a suggestion that the way people look for things online and where they go to and how they access these things might change. Equally, this may be an area which could ultimately be an opportunity for Rightmove, perhaps.
Yeah. So the threat here is that customer behavior changes, and instead of going onto Rightmove or even a competitor portal to look for property, we just go straight onto an LLM like ChatGPT, type in our requirements, and it throws up a few suggestions from what it's able to scrape off the web. I think, as you say, in reality, we can be quite skeptical about this. It would require very severe change in customer behavior. I think it's also worth noting that there is a very different, buying property is a very different kettle of fish to buying like a pair of pants or something, where you can just type in give ChatGPT your specific requirements, and it will give you a few links to M&S, Topshop, Zara, etc. Realistically, if you're going to make the huge sort of investment in property, which is likely to be the biggest you ever make, you want to be very deep and thorough in your search, and that means engaging fully with a portal, probably, rather than like Rightmove, rather than just letting ChatGPT throw a few things at you and seeing if you like the look of any of them. One potential outcome is that Rightmove could partner with ChatGPT, so that GPT potentially promotes it when people search, for example. Or indeed, ChatGPT could partner with a rival, which may then threaten Rightmove's dominant market share. So while I think it's unlikely that we'll see AI disintermediate property portals, they could help slightly shift the landscape.
Let's talk about this lawsuit. Can we say a bit about what it involves? And also, well, maybe we'll come on to it. It's a possible question to say, will this be a problem for Rightmove? We don't know the situation, but it is the case in the context of this entire discussion that it feels like every year or so there is a new existential threat to Rightmove. The most recent being CoStar, the US company, buying On the Market. Everyone thought, oh, well, huge investment will be going into that now, and then this will be soon competing with Rightmove for market dominance, which just so far hasn't happened at all, really. It's very hard to say a lawsuit will be the same as that, but can we say a bit about this and what kind of concern it might represent for the company?
Yeah, absolutely. So a litigation fund, which is backed by the activist investor Elliott, very well-known hedge fund, is suing Rightmove for about £1 billion in damages. Very pleasingly round figure. The litigator claims that Rightmove's been abusing its market dominance to charge over the top and unfair prices to the estate agents it partners with, and is seeking to redress this, essentially acting on behalf of those estate agents who are able to opt out of the suit. It's worth noting. I don't think it appears that they haven't all been consulted in advance. I think it's fair to say that a lot of estate agents would much rather Rightmove charge them lower fees than is the reality, especially the smaller ones who don't get bulk discounts in the way that big chains like a Foxtons or Stratton Parker might. But, and again, with the sort of caveat that we're obviously not legal experts, it tends to be the case that the CMA, who's kind of arbitrates this sort of thing, they tend to be more concerned with outcomes for consumers and whether the consumer is being ripped off, rather than those for businesses, which probably should count in Rightmove's favour. I think the other thing worth saying is that if estate agents are so frustrated with Rightmove, then they could just band together and leave the portal en masse for a competitor, like On the Market, but they're yet to do this. So that option is also there, rather than just going through the courts.
Mm. Yeah, I think that was another story about that. I feel like a few years ago, again, about estate agents setting up their own equivalent, which didn't really come to much. But it is the case. We must not forget the middlemen, insofar as there's been a similar situation at Auto Trader in recent weeks too, where the dealers are really quite furious at Auto Trader's new charges and attempts to scale up. Because if you're the portal trying to eke out more and more from them, at some point it's very hard for the rope to snap, because they have very few other places to go, and certainly the coordination problem is real as well, of getting everyone to go at once, but equally there will be some upset there. So just to wrap up quickly though, with all these questions over Rightmove, the shares have clearly fallen a fair way. I think it's about 18% now over the past month. It was relatively richly valued because it's a very profitable business. How do we see the investment case as it stands, given that dip, and conversely given these unknowns on the other side?
Yeah, so as you say, it's down just under 20%. Worth noting that Auto Trader is also down a similar amount, even though its leadership have come out in the subsequent time and said, we have been investing in AI. We have been doing this consistently and prudently over the past decade. So what that means is that Rightmove's now on about 18 times its 2026 analysts' 2026 earnings estimates, and that next year is, of course, when that operating margin will trough. We're at 67%. That will still be kind of one of the highest, if not the highest, in the FTSE. Look, the communication around the investment and around the near term financial hits that it will entail has not been perfect. But realistically, I don't think it permanently jeopardizes the business model. I think Rightmove's moat looks pretty solid and pretty deep. So for a company that's potentially going to compound EPS at 15% from 2030 onwards, and still at sort of high single digits, low double digits in the meantime, 18 times earnings looks pretty attractive.
It's perhaps an indication of the strengths of the company that we haven't even spoken about the moribund housing market, which underlies its entire business, but it's shown itself capable of growing despite that. And who knows, this time next week, maybe we'll be dealing with some different topics in that context, because it is the budget next week. So we'll be back in 1 week's time to discuss the outcome from that. But for today, that's all we have time for. So thank you very much to Hugh, to Val, to Holly, and to our producer, Maddie Apthorpe. We'll see you next time on another Companies and Markets show.